All right. Good morning, and it's Tuesday, up early, Tuesday, September 26th, 7:30 Eastern Time, 7:31. And markets with a little bit of a recovery, crude with a pretty decent bounce off that sell-off. Now back over $89, gap down all the way down to about 88.15. So real interesting trade there on crude. And as I've mentioned previously on a few other broadcasts, is that crude actually appears to be the best trading vehicle in this trader's humble opinion over the last week or week and a half, as far as, setups and tradability. Let's face it. Many of the indexes have been very difficult to trade. And that's not me saying it, just even speaking with other traders saying, very similar things, that the indices have been very, very difficult in that, again, when you're a trader, it's very difficult to trade when something's generally trending. And crude has kind of been all over the place. And it's had a nice range, too, like between tops and bottoms, where the indices they've been fairly range bound. I mean, they really have. I mean, even though they've been grinding lower, they haven't really been, it's been kind of a slow kind of grind. So anyway, and bonds recovering a little bit today. I'm seeing the ZBs actually with a little bit of a bounce. Again, after yesterday, I'm just going to put those up. But after yesterday, I mean, that was like all over. It was splashed all over the news that, it's the 10-year. I think it was the 10-year has never been any higher than it was since back in 2007. Okay, great. That's great. Right. Understandable. So what? So what? So effing what? Like, what's the trade? What is the trade? Shut up. I know. That's why financial news is terrible. I listen to Bloomberg in the background, and I more or less, I don't know if anybody watches Bloomberg, but what's nice about Bloomberg is they kind of have the whole screen thing going on, where they actually will scroll the stories, and which is nice, and then they have their talking head jackasses in the background, who I don't listen to, which is nice about Bloomberg. At least they have that scrolling news service, which is nice. It passes the time. I mean, I don't know how useful it is, but anyway, nonetheless, nice recovery of bonds. And I kind of kicking myself because I really wanted to get long the ZBs yesterday, specifically last night on the open, and I just didn't have the balls to do it. Let's face it. I just didn't have the balls to do it. I didn't pull the trigger. So I was scared. I didn't do it. It kind of sat here and, didn't really reverse until the European Open. It was when it really kind of took off. So, kind of chopped and slopped. And everybody knows trading ZBs, it's 32.50 a clip. And for somebody with my trading style, I don't really use a big wide stop. I would need to use at least I would probably go with like a 5-tick stop. I know it's tight, but someone with my trading style, I probably would have gotten stopped out last night. Anyway, but it's 32.50 a clip for a tick. So I mean, you can get chewed alive in here pretty quick. It's not a big of a contract. The margin's not that insane. It's got a big tick size. And I don't trade the 10-year because, honestly, it just doesn't really move as much as the 30. So anyway, that bonds with a really nice recovery today. I still believe in bonds that, I think if you were going to accumulate anything long and be contrarian, now is the time to do it. I think you'd still, they may even go a little lower. And I would do so in the TLT. So that's really all I want to say about bonds. I don't want to get into that thing. I'll put up the TLT just to show you a chart. I mean, it looks extremely similar to, you can see it's almost exactly the same as the 30-year bond because it basically is the 30-year bond. It used to be called used to be called the Lehman 20-year Treasury Trust. Yes, it did. It wasn't an iShare. It was the Lehman. It was the Shear. And then it went Lehman. Then it went Shearson Lehman. And that's what it used to be called. At least that's what I remember it being called. And that ages myself. So there's the TLT. And you can see we are at, an extreme. And as I mentioned yesterday too, is I think the way to play this TLT is you got good volatility in here today, like 40. I may actually do. I've been doing some calendar spreads. I may sell a little premium in here today, out in January, and I may do a little put spread. Nothing huge. I kind of like maybe the 85 here, maybe the 85-80 put spread. I'm going to stay small. I'm not going to get crazy on this TLT. Maybe the 90-85. Because I have plenty of call spreads already, and I don't really want to overpile into one sort of position. But I may, with volatility being up in the 40s in here, I mean, that's historically fairly high for TLT. Because this thing usually doesn't break double digits. I mean, at extremes at times it's like the IV rank is 15. This in the 40s is actually pretty. So, that's usually a time when you want to sell volatility is when it's not just high, but historically high for that underlying. So that's one strategy I'm going to take on today is maybe selling a little put spread and going out in time too. I'm going out 115 days after January. So there you have it. So that's kind of one thing I got going on today. Let's pop over and let's look at the indices. First and foremost, let's look at the ES. Nothing's really sticking out here. I don't know. I kind of like the extreme up here. I think it is a bit of an extreme. I say extreme. I think it is a bit of an extreme move, but R1 looks really juicy today, 43.84. You're in this huge band. This is a pretty solid band of just selling, and it's going to take quite a lot of momentum to chop through that. And you have pretty much, the top of a high volume node here right at R1. And it is kind of the swing high or high from yesterday. So I kind of like that as a short. Now, again, with these types of trades, I'm not bequeathing them to my kids. So, we're just going to set this alert and, let it go. We're going to look for 8, 10, maybe 15 ticks on a pullback at that spot. And as I said, you have this large band here that's, to me, going to be integral to this thing, getting on a bullish run. It's going to have to chew through all this negative or downside inventory to get through there. And it's going to need a lot of catalyst, in my opinion. Anyway, so that's how I see it. And I actually like all of these spots up here to the upside. Now, we already have an alert set at 44.16 on the ES, which is very close to the R3. And you also have R2, which I also think is a decent setup today because it's actually the swing high from Friday, a couple of days ago. So that is also a good spot, I think, for a short as well. Okay, and again, that's where what I'm looking at here is I'm looking at not only the pivots and where some high volume nodes are, I'm also looking at the inventory, and the inventory here is just, it's sell side, and it's going to take a lot to get through there. And if it does, we do have some upside. It does look like there might be some gravity all the way up. I would say all the way up to 44.68. So, but I don't want to get too far ahead of it. We trade for today. I mean, I'm not going to get that far along the line. I don't know what would happen to bring us up to that level today. That would be a stretch. So that's what we have going on the upside. On the downside, I'm going to have to flip charts on you because none of these levels down here particularly look interesting to the downside. I really don't have, as I mentioned, we are kind of in that area of that gap, right? I mean, R3 is literally right in the middle of that gap from back in June, right? 43.22. I don't know if I really want to get long there. I'm alerted. I'm being alerted at pretty much the big round number. I think it's close. It's not just exactly 42.97. And then really my prime entry here is 42.89. And again, that is a big move today. If we get down there today, but I'm not taking any of those trades to the downside, because if it gets weak here, there's a good chance it's not going to have, again, it's one of these things where you don't have a lot of inventory there to kind of stop it from kind of falling. And that's why I always like to mark these volume holes, because they're just as important as the high volume nodes. In that lack of interest will actually cause the thing to fall through here fast. So anyway, that's kind of what's going on in the ES. So again, nothing really to the downside. I mean, look, if you want to take an S2 today, by all means, go ahead. I'm not saying it's not completely off the table. It was kind of a swing low that we were not able to break through. Possibly, I don't know if you get it to bounce there. It's one of those where you trade it and, have a quick stop, maybe 6 to 8 ticks, pretty standard for me anyway. But don't look for a big, huge bounce there, because we could very easily fall through there like it doesn't even exist. So don't expect that big retrace for it to come back down and then make a big retrace. Don't expect it. I guess, again, just looking at that chart to me doesn't... I marked it anyway, and then S3 is kind of the similar thing. I don't know if I would take that trade. If we start falling down at S3, I just pretty much wait for my other entry, which was like 42.97 or so. Is what I said. So anyway, that's kind of it on the ES. Nothing on the Russell. The Russell's been very hard to trade, quite candidly. I've had some issues with the Russell. I've had some issue with Russell. I put him in timeout. I put him in timeout because that's the day and age we were in. If it was when I was growing up, I wouldn't have put him in timeout. I would have beat the shit out of him and then send him to timeout. You're not allowed to do that anymore because of feelings. But yet I do still have this mark down here as like kind of the bottom of the Head and Shoulders. I think maybe I was wrong. I should have probably moved this down here, because it looks like this is going to turn out to be the bottom of the Head and Shoulders, which brings us down to about 1740, maybe even lower. But that's kind of about where most of this business is here. And we're getting surprisingly close. I do like S3 today at 1770 for a possible setup. All right, and that's it. So that's it on the Russell. Nothing really to the upside. I would be really careful. I mean, R1 looks juicy. R1 looks very juicy here. Right, it's literally a point of control on the larger point of view, and R1. I'll just put them up here, but R1, it was a swing high. We could not get through there. We fell here, and we could not get through there yesterday. So, interesting spot. If we get back up there, that may be a decent spot for a short. R2 and R3, not really so much, and I'm not even going to get into that if we get back in the 1845. All right, so that's kind of it on the indices. Let's take a look at the crude oil. As I mentioned, crude oil is kind of then I had one nice trade in crude oil yesterday at exactly the levels that we alerted at. There they are. There it is right there. took that long. It was a quick pop and did pretty good with it. And rallied from that point. And so we had one good trade. And that was it. That was all I had yesterday. And I still have a bunch of stuff marked, right? 88.02 is right at an S3, which we marked way back. All right, so kind of like that spot. I don't know. Again, I'm crude is a real funny thing right now where I think even here, as it looks like it may set up for S1, I think we kind of pop through there. We have a lot of buying up here, and it really doesn't dissipate until you get up near the pivot. The pivot may not be a bad spot for a short, which is about 89.85, and I'm going to mark that on crude oil. So 89.85 for a short on crude, which is at the pivot. And that is really it. I don't know if I'd really play around with R2 or R3 today. Kind of spinning into the different chart without the pivots and looking at more profile stuff. We're still in a spot where there's more downside levels to buy than there is upside levels to sell. Let's see, 91.48. I actually have that marked already, and that's been marked for quite a while. That still stands true, as well as all these other levels up here, but I'm not even going to get into there. So, but for today, let's go just backtrack into that. That's kind of where we are today. So the pivot and possibly S3 on crude. All right, and then soybeans. Yeah, and this was another one that kind of pissed me off because it's been pissing me off a lot lately. It seems like I always happen to have to get up and either take a shit or go do something every time. And I've told everybody, look, I'm not one to go and I don't put orders in when I'm not sitting in front. Now, I'm not sitting there staring at my screen when I put the orders in. Like, I'll put them in and I'll look away and look at something else, do my other job, right? Do some programming, whatever I'm doing. But I like to be sitting at my desk because, again, I've told you, I've had many times where, stops have gotten blown out most of the time. And, the brokerage firm doesn't give a fucking shit about it. They could get, you say, oh, yeah, my stop was put in there. Like, yeah, right, whatever, asshole. No, whatever. So, I would rather just be sitting here. And that happened to me yesterday. So, and I missed it came right to an S3 and bounced beautifully, literally it was 2 ticks of heat. And anyway, needless to say, I still like this level up here for a short, which is 13, what is it? 13, it's 1325, 1305, I should say. 1305.25, because this does it old school style with the little teak like it does in the treasuries. It doesn't do it with the 25, 50, 75. But that level still looks very interesting to me. To the downside, I'm not even doing anything. So that's kind of it on soybeans. Don't really want to talk much about that. Not really doing much in the other commodities as well. I am going to put copper up here because copper is kind of in an interesting kind of spot. And I do follow copper. I don't trade it that much because it's not very liquid, to be honest. The copper futures kind of suck. It's a relatively big contract, but they do kind of suck in that they are not very liquid. But copper is kind of in a spot here, and this is why I want to put this up, because we're literally banging on the door here in copper to the downside, where if it breaks, and then if I do this, if it breaks here, we could be in for a little bit of a kind of a spill here where copper really just kind of tanks. And that is not going to be good for the economy in general. It's not going to be good for anything. Because basically, so goes copper, so goes the economy. At least how I always look at it. If copper's generally trending up, you can kind of say, hey, the economy's growing. People are building industrial products. Demand is good, blah, 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 blah. Not the case. Like you can see here, since 2023, the trend has been completely down, but not out. Down, but not out. And almost, you could almost say this is like a falling wedge or whatever the fuck they want to call it, right? Whatever they call that, right? Isn't that a falling wedge? Is it a falling wedge? I think it is a falling, it's a descending triangle, not an ascending. So it's a descending triangle, probably pure case, right? There's your descending and there's the bottom of it. And again, if we break here, we do have this little area here, but I'm kind of looking at that as maybe that's just another spot here. This kind of aligns as well. So, again, technically, that's why technicals, folks, that's why I always try to tell people, like, look, technicals are great, but, most of the time they only line up when you want them to line up. But you got a couple of spots here. So I guess my point is if we break here, you got a good chance of this thing dropping down to about I think there's a lot of gravity down to 340. And I guess my point being is at 340, I'm going to be a buyer of copper down there. And I'm going to be a buyer of copper probably all the way down from that point. Because I think copper will get into a situation like treasuries are now where you're going to get into an oversold kind of. And, again, I like to look for stuff to be contrarian on. When everyone's running for the exits, I generally like to be that one person that's not going to run for the exit. I'm not going to be George Costanza and go, fire, fire. Okay, so that's kind of what's going on in copper. Just very interesting pattern here, and I do follow it. I just want to throw that out there, as something to keep an eye on. And then one way to trade copper from an equity perspective is, there's really no other way, is FCX, which is Freeport McMoRan. Now, this is not going to be a one-for-one with copper because they do other things besides copper. But if you look at that chart on Freeport McMoRan, it is very scarily similar to copper. Right, we have pretty much the level here in the short term and then the long term level down here at 26. So we're like a 10-point move. So that's how you would trade copper if you're not going to do the future. And then if you're going to do do options or something like that, Freeport McMoRan, IV rank at 28 is not great. I would like to see it a little bit higher. But if I were going to be trading this again, I would wait for this to drop off a little further. I don't think there's really a play here because again, it hasn't really gotten to the levels yet. But my trader's intuition tells me that volatility will continue to climb in here as copper weakens, and when you start seeing the IV rank in here in the 40s and 50s, it will be time to step in and start selling some puts. So there you go. So that's one thing I think I try and provide folks is I try to tell you, tell you what I'm thinking as far as trade, because everything to me is not just looking at a chart. It's looking at a chart and then what the fuck do you do about it? And then the type of options I would buy is, again, I would sell some puts when this gets to that level. So that would be two things I would look to do, is possibly maybe get long a little copper futures, which are kind of hard, which I mentioned, but more than likely would sell some puts on Freeport McMoRan, which is probably the closest thing as a proxy to copper as you're going to get. And what kind of puts? I would go out. You're going to need to go out in time no matter what. And so I would be looking at Januaries and even these Februaries. at the time. And I just don't, again, it's all timing as well. I don't know how long it's going to take for copper, may wake up next week and copper fall to the level I just talked about. I don't believe it'll be that way. I think it'll be a kind of a grind down. But one thing to keep an eye on would be the volatility level and the volatility rank here in Freeport Mac as an indicator as well. So if you start seeing that in the 40s, that would be a good time, I believe, to start piling in to some longs in copper. Got to be contrarian. All right. Okay. So the big kahuna today is Costco after the bell. So we'll go over Costco. And then Micron is before the bell. Is it before the bell? No, it's after the bell tomorrow, so we don't have to do that. But it is Costco. Decent IV rank of 41. I'll be the first to admit that this stock generally sucks to trade earnings. And it's not because there's not open interest or anything like that, but usually the spreads suck. Like usually they're relatively wide. And then not only that, but a lot of times, well, not in this case, they do have $5 wide strikes even out in November, which is nice because normally with Costco is they only have $10 wides, which kind of, they're tough. There's tough ones to do for a lot of people because they require more money. But I think just so first things first, I'm going to go out to November because October, well, first let's do October. I'll first do October and look down the open interest, and it does look like there is a lot of activity at the 490. Here's the 490. Where's my pen tool? What a schmuck. What a schmuck. He didn't even put his pen tool. Freaking loser. Kind of broadcast you running. Clown show, right? What a clown show. Anyway, with this, the 490s right there have about 1,000. The 500s have some interest. And there's that's a decent juice. Again, it's not great, but that's not bad. So that's kind of where they're landing. They're also landing down here at the 540s here in October. So that's kind of the activity levels on the put side. Expecting a $25 move, right? $25 move over here. IV rank 41. Implied volatility on the month of October is 25%. Okay, and then if we look down on the call side, let's see where some of the money is landing there. It looks like it's 570. Definitely a ton of open interest at 600, which is you can kind of expect that. Let's see, anything else? Outlier? Not really. Nothing out past. And that is the one standard deviation move, which makes me believe that probably it's Sosnoff. He's probably 1,000 of that open interest because, he always shows you that he does one contract on the show, but the dude's doing like fucking 100 or 10. You know what I mean? Come on, he's got the gash. He's a player. He's not doing no one contract garbage. Where I would say most of that open interest probably is him. I actually like that. That is not a bad. So if you're going to do the pure one standard D, the pure one standard D brings you to, this is October now. The pure one standard D strangle brings you to the 520. 600 strangle. Now, this is not the buying power. This is my IRA, so it doesn't give me true buying power because I have, but buying power is still thick in here. It's still $7,000, $7,300 to do a strangle. Now, if you have the capital, go for it, right? That's fine. it's really not that risky. It's just you got to tie up that amount of money, and chances are you're going to probably blow out of this tomorrow anyway. Right? You're not hanging on to this, so you're not really carrying that balance for like weeks. Hopefully, if it stays within the range. But that's a pure one standard deviation strangle in Costco. You bring up the curve. This is what it looks like. This is your band, your profitability band. And so pretty straightforward. Not a great theta, in my opinion, for something that you're taking on that much risk, but nonetheless, max profit 490, which is what you bring in. I would believe that by the time this is tradable, which you're going to want to do something like this around 3:30 Eastern time, start putting it on around 3:30 or so. You might be able to do this for about $5. But you got a good pop in here, 78%. Again, the downside to this trade is this right here, which sucks for most people. Including me. Not most people, but even me. That blows, right? I don't want to bang out that much buying power for anything. It just doesn't make sense. So what most likely I'm going to do here is, since I do like that trade the best, is the one standard deviation trade, is just cover it. And at this rate, again, this is not great. You're not bringing in a ton of premium on this, a little over $1. You might be able to do this for like 110 maybe tonight. Maybe. But you'd see you're not using much buying power on this. And you're in a good band. You're outside the expected move. And you are literally at probably the highest probability trade as you're going to get for earnings being outside. You're outside one standard deviation on both sides. And right, the probability of those one standard deviation or more moves is they're outliers. And then you got a 74% pop. So this is actually a pretty good trade. I'm actually probably going to put this one on. This is probably most likely one. Now again, I see probably and most likely, because I don't know what Costco is going to do today. If it's down $10, I'm obviously going to adjust it, right? I might have to adjust it a strike down on either side here, right, to keep it within that one standard, right? I don't know what's going to happen. So again, based on the price today, it's $5.56. This is the trade to do. You got to be flexible. And that's October. Now let's go out. You're going to get, and if I actually go out into November actually looks a little bit better. But the problem with November is the same trade out in November is not in the one standard deviation. You can notice that what went down is the pop went down, and we're inside now the one standard deviation move in November. Right. So most likely what I would do in this case is I would actually move this out to 610, 605. So I'm right on the one standard deviation. And same with this. I'd be right on the one standard deviation. I'm taking away a little bit of my premium. I would try to do for this 130, and then this almost has a 70% pop. So this is what I would do for November. I may even do both. There's a good chance I do both. Rather than do two contracts on the October, I'll do one in October and one in November. Right? Slightly different spreads. Right? And you can see almost delta neutral completely, which is beautiful. All right. And that's kind of the story there. And that's really it on Costco. That's what we got going on for earnings. So 2 trades for you. I don't really think you can do it any other way. I don't really think you're going to want to just sell puts or calendar spread. I don't think it's going to be worth it, because chances are is tomorrow morning This IV rank is probably going to be in the 20s. It'll probably get cut in half. All right. All right. And that's it. I think we made it. 35 minutes. So I thought was a pretty good show today. Tuesday, September 26th. And good luck today. Have a good one. And